Hi guys, I got a request to review um, XP Factory a year on from a previous video, and I thought that was a good idea. And the most recent update I can see is the interims um, ending the 30th of September 2024. So I'm going to review them, and I think they're pretty good to be honest. I'll go over this one pager um, because I think it says a good picture. Um, So XP Factory is a really small company at the moment. Like it's gone from being unprofitable to profitable over the last 5 years. I picked up on it in 2020 or 2021, something like that. And then have been steadily investing in it. Share price is pretty not correlated to the growth. The revenue has gone up in the half 33%. Gross profit is up 33%. Site level EBITDA up 11%, but then adjusted EBITDA up 30%. And then another group adjusted EBITDA. There's some notes to this up 34%. Free cash is down a tiny bit. Let's look at the notes first. Um, so they've restated comparatives from a year earlier. I think this is fairly trustworthy, so I'm gonna go by this. Um, just for those that know the rule of 72, um, for every if you divide the growth rate by 72, you get how fast it doubles. This means that earnings, if they continue at this rate, um, if they're growing at, let's say, 33% a year, let's just annualize this. That means it's roughly just over 2 years that earnings are going to double every 2 years, um, which is a phenomenal growth rate. Let's look at the financial highlights here. Um, Escape Hunt revenue increased 7%, but Boom Battle Bars, which is the growth brand, revenue increased 56%, which is really interesting. So that is just providing more growth now than before, because before Escape Hunt was the brand that was really the go-to brand for XP Factory. Now this smaller brand that they bought for just a couple of million is now generating 17 million in a half, as opposed to H1 2023, which was 11 million. So it's up quite a bit. Gross margin is still high at nearly 63%. You know, for a physical company, that's a strong gross margin. These adjusted profits saying it's up 30%. Site level 11%. That might need to be digged into, but I'm a long-term investor here, so even if it's somewhere between that at like 20% earnings growth, like it's still pretty good. Um, they invested 3.6 million in capex. So they might not need to do that every year. So the actual earnings could have been quite a bit higher. Could have been 6 million, which would have been quite 300% change from 2 years ago. I don't know why they're comparing 2 years ago here. I think that's a little bit unusual. They really should be comparing 1 year ago rather than 2 years ago. Um, Nevertheless. So like for likes up 4%, nearly 5% in a half year compared to last year. 5.6% excluding 2 weeks of riots. Um, Escape Hunt up 3%. So I think it's a growth story. I don't think it's probably not the fastest growing company in the UK, um but it's still very good. And I'm happy with it. That's the most recent update I can see. So I'm still like bullish on the company if they can keep growing at this rate. I mean, I'm gonna just stop sharing a moment just to see if I can find last year's, because if they're growing at 33% over a 2 year period, that means they're only growing at 16%, which means they're doubling every 4 years, which isn't bad. I mean, a medium growing blue chip might double every 10 years. That's still faster than that. but it's obviously a lot slower than growing at 33% a year. So let's just have a quick look to see if there's anything that talks about that. Capital Markets Day 2025. This is the most recent. Um, so I'll share my screen now. This looks a lot more recent. So, okay. Right. So, Capital Markets Day, March 2025. We're in, it's 2 months ago from now. So this condensed version, the CEO joined in 2017. So he was at Pret. I'm quite impressed with the CEO, to be honest. Yeah. I don't need to be convinced about the CEO, to be honest. I think, yeah. Fine, that's the team. The two brands. All right, so they've got like 47 stores for escape rooms, really high reviews. Acquired in 2021. Yeah, I think I started investing in 2020, or maybe even before that, to be honest. Anyway, I actually attended my first Boom Battle Bar the other day. I thought it was a fun experience, but it wasn't as busy as I expected, to be honest. It was on a weekday evening, and we did spend about 20 quid or something, and we didn't actually, including food, I think I did spend over £25. Yeah. It's interesting that they spend about the same across the portfolio, but they have a lot more customers. That's really interesting. I haven't seen that split before. It's look interesting that it's inverted, and that there's more women playing Escape Hunt, but there's more men at Boom Battle Bars. And now the growth of Boom is just massively surpassing Escape Hunt. It's a nice blend there of game, drink, and food with Boom, whereas with Escape Hunt, if any of these games fall off, that you know that's a real risk to the company. Although I haven't seen that when I've been following them for years, and I think there's a lot of longevity in their games. Having said that, there's a nice split here. Obviously, people are going to Boom not for the food and the drink, but so it's that argument is still consistent that the games really drive the volume. Typical site revenue 2 million. Wow. The margin is 20%. So it's 400K. The margin on this is 40%, which is actually probably not too dissimilar, to be honest. It's probably about 250K or something like that. Um, yeah, but obviously Boom is where it's at. I assume it's harder to find these units because they're bigger and it's probably harder to finance them. I wonder if they bring that up. No, it's not in the next slide. But anyway, so this is the geographic coverage. Boom's obviously got a lot more space to grow. I wonder if they're capped at the number of booms because of the form factor. This is really much smaller Escape Hunt. Um, for example, I wonder if you could have um, in London, they've got, it looks to me it's a bit complicated. This is that 4 booms and 2 escape hunts? I don't know. Um, I was going to ask the question of how many booms could you have in a big city like London, and how many XP escape hunts could you have? So bar revenue's going down, but game revenue's going up. So they're the top of the competitive socializing. But I don't know how this is tracked. Number of UK sites. Is that what they say? Yeah, number of UK sites, excluding bowling specialists. So I assume Hollywood Bowl would outpace this. Isn't Lane 7, isn't that bowling? Right, so they've selectively chosen to remove some of the bigger players here, which don't know why they would do that really. But anyway, it's all good. Modular sites, repeatable, growing brand awareness and reputation. From a marketing perspective, I think that's really important. Their stores and their word of mouth do the marketing for them. So they're a kind of brand that doesn't necessarily need to spend that much money on marketing. Whereas most companies that I've worked with and invested in, you do need to spend a lot of money on marketing, on brand awareness, on conversion. Um, but maybe these companies don't need to spend quite as much as a share of revenue that most other companies need to. So because they're well loved, look at these review scores. Battle Boom 4.8, Escape Hunt 4.9. Yeah. Golf Fang has got a 4.9. So maybe they want to increase. I don't, it's interesting they don't have any golf games. Um, that could be interesting. Well, I didn't see any when I went to one of them. They might have a golf game. Keep me honest in the comments, obviously. So this is the closure of stores. It says industry closure, so I don't know if this is the whole number of escape hunts. Sorry, escape rooms. Yeah, okay. Escape room competitor sites. So it's gone down, so then maybe there's a consolidation. Maybe they can buy competitors. So they're saying that escape hunt is increasingly attractive to landlords because of the reputation. So landlords want to entice them basically, unlike traditional retail, which is challenged by generating footfall. These brands generate footfall. So saying the number one position in unit economics. So yeah, this is interesting. So the EBITDA margin is higher on Escape Hunt. So they definitely shouldn't get rid of Escape Hunt. Like it's obviously driving value. Um, so it's good that they've got the net return on capital employed there, which is interesting. Don't know why they didn't just break this out to have the average EBITDA per store because you have to do the maths yourself, which is a bit annoying. Um, but that's 340K and that's 400K, so there's only 60K in it. But you got to spend an extra 400,000 on a boom, but you get an incentive of 300, so an extra 150. So it works out really quite similar. And that's why they've broken this out at net ROCE, net return on capital employed, is actually higher because of this landlord incentive. Um, yeah, this is to do with Escape Hunt. I haven't been to Escape Hunt. That's really not. I like the idea of it, but it's not really. Um, Theoretically, I like the idea, but I don't like. I don't like the idea of being trapped in a room to play a game to get out. Um, yeah. So, but as a company, I think it's interesting. They've got these different things. You know, people like it. Fine. Um, like for like unit economics. So a 5 year um comparison, 35% growth in revenue. Um, Labor costs have gone up a little bit, but not that much. As a percentage of sales, they've gone down. Other costs are basically the same, which is good. Site EBITDA's up from 100,000 to 269, which is great. And margins have almost doubled as well, which is good. It's not a huge revenue growth though. Um, Obviously, COVID has played a factor. However, we're out of COVID now. Learnings to drive improvement. Game A lane 4, potential lanes. Game A lane 5. So there's opportunity here for game mix, site layout. And this is something Rich has talked about for years, improving this. And I think go into the stores, I still saw these mini games and I played them. Very small footfall games that cost a quid or two to play. They're fun. If you're with a group of people, everyone's going to pay a couple of quid and then play them. And I think that's a really good model. Okay, so the target's 13 million of EBITDA in 3 years from the time of recording. Wow, so you can see they're learning. So average net return on capital by the cohort of time they launched. The most recent stores are getting over 50% return on capital, which is amazing. I don't know if they do that for Boom as well. Do they talk about Boom in that regard? Can't see. Maybe it goes down after to talk about it. It's opened in 2024. It's a macro location. Average salary is about 34, 35. City population 100K. Um, and they've got another smaller micro location in Worcester. Okay. So they get a lot of review volume because of like their investment in their product, in their service, in everything they do. Higher build things and exceptional content to their games. So competitors are closing, so that's helping Escape Hunt. So it's likely to increase. I suppose this could be the summer period. It's 24, 25 weeks when people go away. So that's good. 10 sites per annum. longer runway than I initially thought. Yeah, I think they weren't thinking that like Escape Hunt was going to mature as well. They're not actually spending that much on maintenance capex. So I think there's a potential for 100 plus sites in the midterm. Originally, it was over 50. There's 100 UK towns and cities with a population over 100K. There's a potential of more than one in certain cities, like two profitable in Norwich. Additional potential in smaller catchment yet to be explored. So they could have a micro. They could try in a city of 50,000. So to be honest, yeah, you could look at 200 stores maybe for Escape Hunt. So they want to have 50, 60 stores by 2028 with around 30 million revenue and 40% EBITDA margin. So that's like they talked earlier about a 15 million EBITDA margin for 2028, but when they break it out, they're actually a bit more bullish, and they're saying that they can get 13 million or whatever it is in EBITDA just from Escape Hunt. So now let's look at Boom. So they're saying exceptional and large catchment populations, and but they've also got this micro location, but it needs to have like good site visibility and natural footfall and probably a low city center location. 9 mature locations, 60% return on capital. Over what time period? I think that's kind of interesting to find out how long it takes. Date nights that boom, love that. Oxford Street, okay, but how many Oxford Streets are there? You know, I'm paying devil's advocate here. So this is good. They've got a secondary city case study. So this is Cambridge. It's the second strongest opening in the whole estate. 2 to 4 sites per annum, right? So this is interesting. So they think they can get 20% margin. So they can make 12 million there. So let's say it's 13 million and 12 million. So they're saying they can make 25 million of EBITDA in like 3 years, 3 to 4 years from now. Report in 3 years, but probably reporting in 4 years' time. Um, right. This is all operational stuff. Bum, 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 bum. Yeah, I think these are kind of funny years. I mean, some of these years are the pandemic years. Right. My overall, I'm not going to go for absolutely everything here because it's kind of overkill. Yeah, I don't understand why they're saying it's 13 million unless I've done my calculations wrong. 40% of 30 million is above, plus the 20% of 60 million, which is 12 million EBITDA. And if you add them together, it's a lot more than 13 million. It's over 20 million. So yeah, I'm not really sure unless I've done something wrong here. I'm a bit tired. At my birthday weekend, so my birthday is on the 2nd of May, and My wife's on the 3rd of May. Okay, let's just have a look at the share price. I really don't think it's going to reflect um XP. Yes. I think they've, in line with sort of the UK and the lack of interest in the UK, I don't think they've done that much. It's down 3% 6 months, 10% year to date, 20% over a year. I mean, it's really sort of collapsed. I bought in 2020, so and I went on to buy in 21, 22. Um, so I don't think I'm up. I think I'm down because of the collapse. It's gone from 50p to 11p. And anyone that invested right at the start has gone from 150p. So it's down about 90%. But I think, listen, it's only valued at 20 million. If they can, uh, if they can reach their goals of 10 to 20 million of earnings, they could easily be valued at 10x earnings. So they could be valued at 250 million. So it's on it. So if we think about risk return, um, it could 10x from here. It could. Will it do this overnight? No. Will it do it in 3 years? Even if they get to 10, 20 million revenue, doesn't mean it's going to go up 10x. The market does its own thing. I don't think the market is pricing in the value of the company, personally. I don't. It's got many, many stores in the UK. They're saying they can have 100 stores and build 10 stores a year of escape hunt and 2 to 4 booms. That's 12 to 15 stores roughly a year. You know, to value it at 19 million when they're producing probably store value of, that just the asset value in itself is pretty high, but the brand value of having these big sites, the revenue they're going to achieve, if they're achieving 50% return on capital over, once they've matured after a year or so, if that is the case, then this is a drastically low valuation in my mind. If this was an American company, there's just no way it would be have that kind of valuation. Hollywood Bowl is worth 500 million. It's got a P ratio of 17. So if we go by a 17 valuation, 17 times earnings valuation at 20 million, this could be valued at around 350 to 400 million. So it could be a 20xer in 5 years, let's say. So I do think there's a lot of value, and you can't always listen to the price. The price is not the value. The value is the value is the value, as it were. The story, the growth. So I think there's still value in Escape Hunt, and they haven't really matured it in other markets. So the UK value is probably 200 to 400 million. But what about, once they do that, what about Europe? How many towns in Europe are there that have 100,000 residents? They can port their learnings. They previously did go in Europe, and I don't think they had the learnings that they have now. And they use franchises. Maybe they want to think about once we get to 2028, 2029, when they've got 10, 15 million in earnings and EBITDA, you know, for me, that releases the question of where do we go next? Can we look at micro cities in the UK and get to a 300 to 400 store count in the UK? Once they get to that and they're getting, let's say, 30 million in EBITDA, and suddenly they're valued at 500 million, then they can start thinking about Europe and America. So I actually think if you're thinking very long term, that's not even that long term, really. 5, 10 years, that's not that long term. Um, this could be. there's the potential for this to be a generational stock, i.e., if you're 30, 40 now and you want to hold it for 20 years, there's nothing, in my mind, there's nothing stopping this company being worth a billion. Think about it, in 10 years, is a billion going to be worth as much it is as it is now? Probably not. It's probably going to be equivalent to something like 700 million right now. And if we compare it to Hollywood Bowl, that's valued at over 400 million at 17 times earnings, with a dividend. If Escape Home and XP Factory do not pay out dividends and just continue on this growth trajectory, have their 100 escape punts, have 50 boom bars, then go into smaller sites, then go into Europe. There's literally nothing stopping this being a $1 billion company. It's gone from no earnings to profitability. I spoke to a friend of mine who's very skeptical. He thought they were going to go bust. I'm like, there's no way this company's going bust with the revenue growth that they've got. They're now profitable. Are they well rated by the market? Absolutely not. Are they well rated by me? Yes, they are. I've got faith in them. Personally, I've been having some issues with layoffs and in the tech world. I'm now in role working for Unilever, not a small company, in a very senior role there. Um, but I'm buying a house. I'm trying to buy a house with my significant other, my wife. So it's not the season for me to be buying really stocks. I've got to be saving. I need about over 50,000 to buy this house because I've got I've got some other stuff in the portfolio. So, but if I didn't have that now, I would be thinking about the long-term prospects of this company. Are there any other companies I'd be thinking about? Yeah, there are. Moneybox tripled profits in the last year, and Moneybox is valued at around 500 million already. But when you're tripling profits, when you're that size, folks, rule of 72, if you're growing 300%, the company's going to be worth a hell of a lot. So I think Moneybox is an interesting one. It's not public, it's private. Um, but I do like that stock, and there are other stocks I like, both public and private. I think Wise is an interesting one, which I made a video on. Um, it's almost like the master fintechs. A lot of fintechs go through Wise. Excuse me. So I think, yeah, I think there are other companies, but you know, if I had this, if I was somebody else, I can't give advice. I'm just saying my opinion. But my opinion is, if you've got this stock, like I've got it, yeah, there's a risk of it going down, but there's also a risk of it. There's also the opportunity that it could 20 to 30x in 10 years. And there's just not that many companies that can 20 to 30x. If you're investing in Meta, it might 5 to 10x in 10 years, but I don't think it's going to 20 to 30x. I think it's less likely. Um, I think leisure itself is a field that is going to grow as automation and AI and virtual worlds and the metaverse and all those things kind of grow. I think there's also going to be a counter trend in terms of physical experiences. So I actually think the long term of this brand is going to grow. And there's nothing stopping them having, more AR and things like that within the actual store format, or indeed having something, virtual thing, which I think they trialed in lockdown. But anyway, the growth rate of this store portfolio, the experiential competitive gaming, um, on the high street, I think the runway is long. So that's one tick. The return on capital, it's over 50%. That's a major tick. Um, the low, they've got a capital runway in terms of a 10 million pounds Barclays facility, rolling capital facility, or whatever they call that. So they've got the funds there. Um, they've got a quick payback period, so they can grow organically as well. So I think the overall, it ticks all the boxes for me to be a growth stock. Unlike some of the other stocks, that I'm looking at, I think Tortilla is faltering. Yes, that small stock has lost value, Does it have the same turnaround perspective? It's a turnaround. It's not a growth stock, in my opinion, Tortilla. Whereas XP Factory is a growth stock through and through. Um, it's at the early stages, so some people might think it's too early for them to invest in such a small company. But feel free to tune into this channel and take a look at how have they progressed year on year. I try to produce a video roughly once a year on these companies to see how they're going. I must admit I've been a little bit the videos have been a bit sparser, in tune with the fact that I've been, was looking for work for many months, and I landed Unilever. Um, so I might produce more videos, who knows? But yeah, in answer to the comment of the listener to the viewer of my YouTube channel, I like XP. I think it ticks. If you think about Monish Pobrai, who's a fantastic growth investor, he talks about return on capital. He talks about runway. He talks about risk. He thinks about going after companies that are the biggest in the space or have the potential to be the biggest in the space. XP Factory tick all of those boxes. It's a shame it's not in India, to be honest, because they could have 2,000 stores or 3,000 stores in India, whereas in the UK the cap might be, I don't know, 400 or 500. Anyway, overall, yeah, I wouldn't sell. If I were in a position, this is just me, it's not advice, but if I had more available capital that's not going to be tied up in property, I would be buying XP Factory. I think it's a phenomenal company. It's got good management, it's got good services, good products, great economics, great runway. I don't see any negatives. Maybe the share price is a little bit low. There's not enough momentum with that, but that will come. Value will be recognized in the market. So that's my opinion on it. Remember, guys, knowledge is power, especially the right kind of knowledge. Hope this has been helpful. If it has, give it a thumbs up, and I'll see you guys in the next upcoming video. Take care.